we did some research. As soon as the tariffs came out, we looked at, okay, what is the impact here? What is really going to be the impact on China, on China's economy, and especially in the sectors that we look at most closely, which is the internet sector, which we track through our fund KWEB, KWEB. And so out of China's overall exports of manufactured goods to the United States, now this is going to sound a little shocking, actually represent only 2.3% of China's GDP. So that's in 2024. Okay. How do we get that number? Where does that come from? Well, exports of manufactured goods in China have come down significantly over the past 10 years. So that says China has moved from an export manufacturing oriented economy to a more internal domestic consumption oriented economy.
This will be actually a very well-timed conversation because this is going to be all about China from Henry Green, who's with KraneShares, which is a pretty big fund issuer, which knows a little bit about China, given some of their products. So I'm looking forward to learning from Henry here. This will be an edited podcast under Lead Lag Live on all of your favorite platforms, Apple, YouTube, and Spotify. If you're watching this on X, do me a favor, like and repost this. I want to get as many people watching this, as many eyeballs on this as possible. And final thing I'll say is this is a sponsored conversation. KraneShares is one of my clients. Big fan of the kind of work that they do. So let's get right into it. My name is Michael Gaia, publisher of the Lead Lag Report. Joining me here is Henry Green of KraneShares. Henry, first time you and I are doing this and talking, introduce yourself to the audience. Who are you? What's your background? What have you done throughout your career? And what are you doing at KraneShares?
Yeah. Hi, everybody. Michael, thank you so much for having me. I'm really excited to have this discussion. As you said, very timely discussion today. So I'm an investment strategist at KraneShares, ETFs. Been doing this for 5 going on 6 years. I've spent a little time in fintech industry, and I've been at KraneShares for a big chunk, most of my career now, and so it's been a really kind of interesting ride. So just a background of KraneShares. So we are an ETF issuer, as Mike said. We started off, so our founder, Jonathan Crane, actually started, he's an American who started and ran a successful mobile ticketing business in China. So they were actually the first, one of the first adopters of QR code mobile ticketing in China. And that was able to increase trust, and they were able to bring a lot of foreign acts into China. And then John came back to the United States and said, you know what? I'm seeing all this great growth going on in China, seeing this transformation of what's happening in China's economy. And notice that U.S. investors don't really have did not at the time have a convenient way to access China in a passive investment vehicle. So we saw the rise of China. He saw the rise of China as an asset class, as part of an asset allocation, and he saw the rise of ETFs, and he kind of married those two megatrends to create KraneShares. Now, over the years, we've expanded beyond China to other emerging markets, as well as we've embraced new kind of alternative investments. And so our goal now, our kind of raison d'etre, is to provide opportunities, to provide exposures that you can have in your portfolio that you really wouldn't otherwise get elsewhere. And of course, to make those asset classes, those strategies as easy as possible to invest in. And so a big part of that is we do a lot of content. We run a daily blog on China's markets called ChinaLastNight.com. As well as we have research that's available through KraneShares.com, and that's also a subscription. And so we really value one of my key roles is just educating investors, keeping investors informed, not only on our products, but also what's going on in the market. So we tend to have a very kind of nuanced, different perspective than what you might get through the mainstream financial media or mainstream media in general. So we always like to kind of provide this alternative perspective to global events, global markets, and then pair that with what we think are some pretty unique investment strategies. So yeah, that's what we're all about.
Raison d'etre is a good term. What exactly is the raison d'etre of imposing tariffs on China?
Oof, man, that's a good one.
Let's get right into it, man. Let's do it.
All right, let's get right into it. Yeah, no waiting around. Yeah, so I mean, our initial, so when Trump first won, start here. When Trump won the presidency, we took a look at what happened during the Biden administration, and a lot of that, there was a little bit of progress in terms of getting things right with the semiconductor restrictions, with kind of what we want. People talk about the small garden, high fence developed by the Biden administration, kind of developing a few safeguards around the U.S.-China relationship. And then we looked at, so what is Trump going to do, right? He's talking about tariffs. We think that, we looked at Trump and said, look, this guy's a deal maker. He wrote a book called The Art of the Deal. And there's this kind of interesting moment going on, where we were saying, well, the most positive view, and again, this was a bit contrarian, right? Because we like to be a little contrarian. And we said, well, Trump could actually be positive for China in that, he will use tariffs to get this big deal signed, to kind of force everybody to come to the table, and really iron out once and for all the issues that have developed kind of as the U.S.-China relationship has evolved over time. And so we did some research saying that, well, actually, like, Trump and given also what we spoke, the people that we spoke to on the ground in China as well, were pretty optimistic about Trump. And so we put out a piece saying, hey, maybe this is a Trump trade. Actually, China stocks could be a Trump trade. And that worked out kind of up until this trade tariff announcement, the Liberation Day, earlier this month, right? And when the tariffs that came up were much higher than expected, much broader than expected. And that's obviously caused a lot of jitters, to put it lightly, in markets, including China markets. And so again, that's my view. Our view is that the tariffs, the idea behind the tariffs, the goal of the tariffs, the raison d'etre of the tariffs should be to generate a trade deal, to have a trade deal, to have a deal on maybe not even just trade, other things, intellectual property, how companies are protected or not protected when they're American companies doing business in China, how Chinese businesses are treated when they're doing business in America. So lots and lots of kind of potential, outcomes here, and agreements that could be made. And that should be, I'm still optimistic that it still is, but that should be the reason for the tariffs. The tariffs should be a temporary measure that is used to bring the parties to the negotiating table.
The question for somebody watching on X, Todd here, which is good. Talking heads say the tariffs are worse for China. I have no idea how that's true. Am I missing something?
Yeah. Well, thanks, Todd. That's a great question. So we did some research. As soon as the tariffs came out, we looked at, okay, what is the impact here? What is really going to be the impact on China, on China's economy, and especially in the sectors that we look at most closely, which is the internet sector, which we track through our fund KWEB, KWEB. And so out of China's overall exports of manufactured goods to the United States, now this is going to sound a little shocking, actually represent only 2.3% of China's GDP. So that's in 2024. Okay. How do we get that number? Where does that come from? Well, exports of manufactured goods in China have come down significantly over the past 10 years. So that says China has moved from an export manufacturing oriented economy to a more internal domestic consumption oriented economy and services oriented economy. So this is a classic path when you go from being a developing country to a middle income to a developed country, where you move from mostly selling goods to the rest of the world, mostly either manufactured or raw materials to the rest of the world, to, having internal services and selling services to the rest of the world. So anyway, China's exports to the United States have come down from, it was over 25%, around 2006, 2010 to today. It's 14% of China's total exports. And then China's total exports of manufactured goods as a percentage of GDP then are only about 11%. So if you take that about 14%, by that 11%, that's how we get to that number we have. Now that 2.3% I mentioned earlier is probably a little bit on the low side because now a lot of companies have moved their supply chains to go through like Vietnam, Southeast Asia, other countries. So maybe factoring that in, maybe it's about 3%. So overall, it's a pretty low impact on China's economy. And this is something that I think that the markets are not understanding, that a lot of the talking heads, as you mentioned, are not understanding right now. I mean, I see people go on the news saying, oh my God, everybody in China is going to be unemployed because of this. That is far from what's going on. China does a lot of trade now with Europe, a lot of trade with Africa. And again, their reliance on external demand on exports has just come down so much that it really has a small impact. Now, if the whole world, put these tariffs on China, yes, that would be a very significant impact. But it's just the United States, which again is just 14% of total exports, and that which then represents 2 to 3% of GDP. This is a pretty muted impact. It's certainly a lot. There will be an impact, but it's a lot less than what people might think.
Talk me through sort of how the political leaders there have been internally maybe talking about Trump. Presumably, they knew tariffs were coming. Maybe not to the magnitude, right, and the kind of boisterousness that we're seeing with Trump. But what's kind of the internal dialogue like?
The internal dialogue is that they're staying strong. They want to present a message domestically that I think they will not kind of back down. I mean, they did the reciprocal tariffs, 84%, and these numbers seem to go up all the time. And so honestly, with the numbers don't even matter here anymore with tariffs, but because it's just so high. But the message domestically that they want to send is, we're not going to be bullied by the United States, right? They used this language saying, actually, a lot of the language saying that, we're not going to back down and everything is fight to the end, is what they say. We will fight to the end on this tariff trade issue, which is actually the same language that was being used during the first trade war, right? And why that's interesting is because the first trade war did result in a pretty significant compromise whereby tariffs were reduced by 50% from 14 to 15 to 7.5. So, you kind of see this rhetoric. China's always going to have this kind of, when it's domestically oriented, especially when it's domestically oriented, this kind of, very prideful, kind of, maybe it sounds aggressive, but just saying, hey, we feel our position is strong, and China's position is quite strong, in my opinion. And it's stronger than it was in the first trade war, but you're seeing the same kind of rhetoric coming out, which, again, doesn't say that much because the first trade war did result in somewhat of a compromise. So, but yeah, definitely there's a strong kind of, message of strength and ability to withstand coming out of China, I think.
I have made the argument prior to this that China's stock market will outperform the U.S. stock market for the next 4 years. And I made that argument not because of Trump. I made that argument purely because of valuations. Right? That the U.S. market is extraordinarily expensive. China is incredibly cheap on a relative basis. Talk me through valuations in China and how tariffs might impact that.
So for valuations, I think we've seen, so talking about KWEB companies, right? So China internet companies, that's Alibaba, PDD, Tencent, Meituan. So we've seen those. They've had a significant re-rating uptrend, starting from the start of this year. And that's come down a little bit more. So the valuations compared to US tech are still very, very low. And we believe that this could be, presenting another good entry point, given where valuations are at. So in the KWEB portfolio currently, we're looking at earnings multiple of about 17% versus closer to 30. Even with the recent downturn, closer to 30, maybe it's dipped below 30 in what we look at as a basket of U.S. Internet tech names, right? So that's that you still have this massive discount, right? And in terms of the trade war's impact on those names, it's very, very limited. I mean, we look at KWEB. So one of the other things we did right when on Liberation Day, we looked at, okay, what's our exposure here? What, fundamentally speaking, what is the percentage of KWEB's revenues coming from the United States that could be threatened by trade barriers? And it was less than 2%. So fundamentally speaking, shouldn't be that much of an impact. Shouldn't be much of an impact on EPS. But on the price, there has been an impact, right? We've been selling off. I would argue that we've held up better than broad U.S. markets, but we've been selling off with everything else as well. So that has impacted the valuation. But again, the EPS, very muted impact. I mean, the most affected company in KWEB is PDD. PDD Holdings used to be known as Pinduoduo, because they actually don't, which is interesting because they do a lot of US revenue, which they don't actually break out in their earnings. So we've estimated at about 15%. Now, PDD, you might not know PDD, you might not know Pinduoduo, but you very well might know Temu, TEMU, which is an app, e-commerce fast fashion app that's become very popular here in the US. And so that's their app. So they're the owner of that, and they do a lot of revenue in the US. So their revenue is very likely to be impacted. We estimate their revenue from the United States to be at about 15%. But again, as a percentage of the total portfolio, take that 15%, go into, PDD is about 4 or 5% of the portfolio. So relatively low, but yeah, they're going to be the most affected.
Say a good question here from John, which relates to some recent headlines I also saw this morning. Can you address the administration's comments as it relates to delisting Chinese companies? If I'm not mistaken, Henry, wasn't that like a threat also in the first administration?
Yes. So, yes, I'm glad that was brought up, because there's a lot of kind of noise and commentary going on around this. So in the beginning, in the first Trump administration, they passed, in 2020, the Holding Foreign Companies Accountable Act, HFCAA. Okay. Now, basically what that act says was you need to have the PCAOB, which is the Public Company Accounting Oversight Board in the United States, be able to go on site for foreign listings. The PCAOB is saying we need to be able to go to your on-site locations. In terms of, I'm speaking of the auditors of these companies, we need to be able to go in on site and review your audit work. This is exactly what the PCAOB does in the United States and all around the world for companies that are publicly listed on our exchanges. The problem was at the time, China's law did not allow for this to happen. There were laws where in certain industries, they said, you cannot have foreign regulators coming in and reviewing the books of these auditors. So in response, and it took time to get this all worked out, in response, China actually changed the law to allow for these PCAOB inspectors to come in and review the audit books of the auditors in China. And when they did that, and they reviewed the work of, these are the China branches of firms like EY, all the big four accounting firms. And when they reviewed their books, they said, okay, we've been given full access. And they did find some violations in some places, right? But the point was, okay, now they're given the same access as they would be given if these companies were located in the United States. So that was really positive. And that prevented the HFCAA, because the HFCAA basically said, if this doesn't happen, companies get delisted. So it prevented that from happening. And now we have a situation, an arrangement where these inspectors can go in and inspect the audit books. And that's all kind of hunky-dory. So fast forward to today. So this has been brought up again in a couple places. One was in one of the White House memos, I believe it was the America First Investment Policy memo, saying, hey, if foreign companies, Chinese companies don't abide by our accounting laws, they will get delisted, right? And then we had the Atkins at his SEC confirmation hearing for SEC chair. He said the same thing. He said, look, if these companies, if foreign companies, especially, I think he said Chinese companies specifically, don't follow our accounting rules, they will get delisted. Now, a lot of this is being said over here and over here and over here. And that makes a lot of people think, oh no, they're going to get delisted. Not true, because, well, I'll put it this way. The companies that don't follow the accounting rules, like he said, will get delisted. But this isn't actually a change in the policy. That's been the policy since the HFCAA, which was back in 2020. So they're really just reiterating this policy. And then in the context, of course, of this trade conflict, this is coming up again as, a lever. Oh, Trump could use this as a lever to put pressure on China, for example, right? But that's a potentiality. And again, this is representing no actual change in policy, right? I mean, from our perspective, we're absolutely not concerned that these mega cap names like Alibaba are going to have serious violations found in their accounting work, right? Some Chinese companies, maybe, yeah. I mean, when they went in and were finally able to inspect these auditors, there were some violations found like that. I mean, this happens all the time, right? But in terms of, and those companies, and maybe they'll apply more scrutiny, and some small names will get delisted, right? And that's totally fine. And honestly, that from our perspective, that should be happening. We should be able to trust the accounting work that's done and audit work that's done on these companies. So that's actually a good thing for these listings. So I think people misinterpret this as Trump administration or others saying, you know what, blanket anything China should be delisted from U.S. stock exchanges. We believe that probability is extremely low. We think doing that would be, number one, antithetical to what Trump is actually trying to do, which is increase the revenues gained from abroad for the United States. I mean, U.S. banks, regulators, exchanges, other financial institutions make a lot of money on companies from abroad, from China, coming to list here. And number two, it would just threaten, the reputation of the U.S. capital markets, which are number one for a reason, because we have strong rule of law, strong liquidity, and it would just threaten that reputation. And again, that's, I believe, is also antithetical to what Trump is trying to accomplish.
You have some fans, by the way. Is this person saying, I like this guy? That's oh wow, that's nice. Yes, but in fairness, this guy could be me too. I mean, we don't know who this guy is. Just saying. But I mean, another good question from Todd. I appreciate Todd you asking these questions. I think this is also kind of maybe a lingering gray swan. I don't know if you call it a black swan, but found it interesting the recent comments attributed to China, including Taiwan. Although geopolitical, this could greatly impact economies. How big is the Taiwan issue? Now, those that are kind of more extreme in their thinking would say, well, you know what, if this tariff thing gets out of hand, then China's going to make their move. What do you think about
that? So I'm assuming this is referring to today's, from the China side, they said, look, we want to talk, appoint a representative to talk with us, and show respect, I think was the word used, and including respect for issues that are important to us, including the status of Taiwan. I mean, look, this has been a long-standing issue that's come up again and again and again, and it will again. I think that as in the first trade war, actually, let me put it this way. China always brings up Taiwan as, in a way to say, okay, they're always talking about what's your posture. They're always examining like, let's keep this issue separate, or let's bring this up, as a way to kind of say, this is an issue that's important to us. Like, will you respect our opinion on this issue? And then the U.S. always, of course, maintains this kind of strategic ambiguity with regard to Taiwan, where we have an institute there that's not an embassy, right? And And I don't really see a lot of that changing. China feels right now, basically when China feels disrespected, as they do right now, like they bring up things like this. They bring up Taiwan and say, oh, you don't respect our opinion on this issue. But I don't see that the situation changing meaningfully from trade negotiations. And it's actually interesting to think about, well, what is Trump's, so from the US side, like, what is Trump's position on Taiwan? And I think that there are a couple things we can look at. I mean, number one is actually the Republican Party platform in 2025. I forget which year it actually was, but did not include a mention of Taiwan for the first time in 40 years. It didn't mention, supporting Taiwan autonomy and independence. So that's one thing we can look at. And then another thing we can look at is, Trump's been willing to deal with Russia on Ukraine. A lot of people draw a parallel there, which I think is a flawed comparison, but, he has kind of his posture there may lead some to intuit that, he would be, similarly, not overly, let's say, hawkish on the Taiwan issue. But though that it makes it very difficult to say. I don't see the U.S. posture towards Taiwan changing much. And I don't think doing so would improve our hand in negotiations with China. Again, and you see this again and again and again. I think China brings this up when it feels threatened, when it feels, and they're using the word disrespect, right? Whatever it is, when they feel threatened, they bring up this issue, and this is going to happen again and again. I believe that the real thinking in China is, Taiwan is going to be the economic benefits. They think that the economic benefits to reunification will become so great and overwhelming that Taiwan will be peacefully reunified in China. That's our view, is that that's what China's actual view is. And, it's interesting. So I've spent time in Taiwan, when I was a student, and, I met with this interesting, this researcher, she has a great book called, Taiwan's China Dilemma. And, she talks about the differing identities in Taiwan, and how people have differing opinions on this political issue. It's not that everybody wants to be hawkish on China and is against reunification with China in Taiwan. They actually have, and moreover, the political party, the KMT, that's in Taiwan, that is more dovish on relations with China, is, the closest you could say that's pro quote unquote reunification, or, liberalization and more closer ties, is the KMT, which is the Kuomintang, which is the actual party that fled, initially to Taiwan back in 1949. So they're actually more pro. It's a newer party, the DPP, which has grown out of this, identity of Taiwan as a separate identity from, PRC, right? They're the ones that are pushing, full independence, and we want to have, U.S. leaders come over here, and we want to assert ourselves, right? So there's a lot of differing opinions, even within. I think it's very underestimated that even within Taiwan, there are differing opinions on this. I think that if you look at the U.S., if you listen to the U.S. media and read in U.S. media, you would think that people in Taiwan are cowering at home, thinking that China's going to invade tomorrow. That's not the case. I was there back in 2016. I've spoken with multiple people, including people I work with who've been there recently. That's not what's going on. I was in Shanghai last year. I was flying to Hong Kong. There was a flight literally at the gate next to mine, with a flight every hour to Taipei. I mean, these two economies are already very integrated. A lot of this is political posturing, and I don't see that situation changing.
Talk me through, as an issuer, how you think about launching funds. I know you've got KWEB, which obviously is wildly popular, and you've got a suite of new products coming out related to China. Talk me through sort of just how that process is from a business perspective, and what some of the newer products are focused on.
Sure. So, like I said at the beginning, our goal tends to be to what can we do to provide investors with newer exposures, with exposures they wouldn't otherwise normally get other places. And a lot of those decisions have been inspired by our founder and CEO's experience in China and our own experience investing in China. So one example is KEMQ, which we designed to basically take our thesis in China about internet companies being the transmission engines, the drivers of domestic consumption in China, and that just seeing this incredible growth through that and applying that to the rest of emerging markets, the rest of the developing world, where you're seeing this digitalization trend. So we included companies like Mercado Libre in Latin America, others looked at companies in India, but it was a lot of Latin America, and so that's one example, right? Is we're taking our lived experience as investors in China and applying that to the rest of the world. And then another way we look at it is we look at, we also work with sub-advisors, right? So we have, for instance, KMLM as a managed futures product. We've partnered with Mount Lucas on that. IVOL, which is basically Treasury inflation protected securities, but with an options tinge. So we've partnered with Nancy Davis from Quadratic on that. So that's another vein is kind of partners, and we get a lot of partnership offers. People come to us, hey, can you launch this or that? And we only launch with partners that we think really have a really good idea. And then we have expanded on KWEB itself. So I talked about KEMQ in the sense that the underlying investment thesis was expanded to the rest of the world. Now what we've been doing over the past couple of years is we've taken the ETF KWEB we realized that the ETF has become just a liquidity machine. It constantly is in one of the top 10 most liquid. And again, that's by the notional value of open interest total. Top 10 of all US listed ETFs. So he said, well, we have this incredible opportunity here to create products that are derivative of KWEB. So we started with CLIP, KLIP, which is covered call strategy on KWEB, using KWEB as the underlying. So that'll deliver option income from selling covered calls on KWEB, thereby benefiting from the heightened volatility we've seen in KWEB over the past few years. And then we also did 2 buffer strategies, KBUF, KPRO. And these are defined outcomes where you have a floor and a ceiling for performance. So you can our idea here was, we were talking to so many investors who were really interested in getting involved in KWEB, in getting into China, but they were concerned about the volatility for their clients, that they have older clients, what have you, risk averse, right? They didn't want to just jump right in. And so this kind of allows people to proverbially dip their toes in China. And then most recently, we've gone into the single stock space and looked at what are the top names, what are the names in KWEB. So looking basically at KWEB and KEMQ, and saying what are the names that are the most kind of volatile up and down, have the best growth prospects in our opinion. And we launched single stock levered. We've launched 2 so far, single stock levered ETFs on PDD, which I mentioned earlier, and Alibaba, of course. And those are KPDD and KBAB, respectively.
Seeing a lot of good questions still popping out.
Right.
Todd is rocking it. Todd, man, Todd's the man with this stuff. We haven't really touched on currency movement. This is a good one here. What do you guys see in regards to the yuan going forward? Is it positioned to be more of a reserve currency? Now, that is a controversial statement. I think ETFs worried about the yuan becoming the reserve currency, but I'm pretty sure most international trade says otherwise. But riff on that for a bit.
Yeah. So a more trade has been being denominated in yuan. I mean, that's just a fact, especially with stemming from the sanctions and Russia being locked out of SWIFT. that increased transactions in yuan significantly. And you've seen chatter of this kind of a BRICS, again, BRICS, that's Brazil, Russia, India, China, South Africa, having this kind of financial link, but that hasn't really happened yet. So this has been a hot topic, right? There's been a lot of talk about this. I don't see the yuan as becoming that much more of a reserve than it already is today. I think especially because with the trade negotiations that are going to come, I think, that they are coming, regardless of, what people say, or that's 150%. This is going to be a key stick. This is going to be a key point. I think most likely that Trump is going to say, you need to still use US dollars. You can't try to make yuan a reserve currency. And I think that's actually something that would be pretty easy for China to concede on. So no, I don't think it'll become more of a reserve currency than it already is. But that doesn't mean that my outlook on the currency's value. I also don't think that they're going to do this extreme devaluing that they've done in the past, just because their situation has changed and they're more of a domestically oriented economy. And the yuan, yeah, well, right. This is what I was going to say is it is so it depends on your definition of reserve currency, right? Because it is in the UNSDR, the special drawing rights basket. So, which is, the IMF. So when countries take loans from the IMF, they get them in these SDRs, which are an amalgamation of different currencies. So it's like the pound, the euro, the dollar, and the yuan and the yen, I believe. So they are included in that. So by that definition, if that makes them a reserve currency, then sure, it already is. But again, I don't think it's going to become more of one. I think that China, again, with these trade negotiations, I think it's likely they could even say they're going to abandon the idea of a BRICS financial link. I think that's something that's easy for them to concede on, right? Compared to other issues. So short answer is no, but it's complicated.
Yeah, that's fair. A fair way to say it. You talk to a lot of individual investors, financial advisors, obviously. What are people getting most wrong about Trump's way of dealing with China?
What do people get wrong about it?
Their perception of Trump's way of dealing with China.
I've been in that camp too, to be honest. I was expecting tariffs to be lower than people expect. I'll be honest, I was wrong about the extent, how far he went with the initial tariffs. But look, at the end of the day, I think Trump's a deal maker. He's a high risk guy, right? A really high risk guy. I think you've seen that his entire career. There was one, I forget where it was, some documentary on Trump where, when he was doing his real estate deals and his companies were so deep in debt, that he made a comment that, people, begging for money on the street are actually wealthier than I am because my net worth is so deep in the red, right? And I think multiple times in his career that's happened, right? So he's just a high risk guy. And you're seeing that play out now where he's really, really digging his heels in on these tariffs. I think, and I would like to think anything's possible. I still believe that this is still deal making 101 and it's maximum pressure. And it is maximum pressure. It's maximum pressure with a capital M-A-N-X. It is serious, right? And he's playing with the US economy. He is genuinely gambling with the US economy, which I hope will result in the deal of a lifetime. I honestly, I want to be able to call Trump a genius for what he's doing. If it results in, especially with China, if it results in a new paradigm between the US and China with increased trust, with better protections for US businesses in China, with better access for the U.S. to Chinese capital also, which isn't really discussed. And I want to be able to call him a genius for doing this. I want to be able to call him the deal maker of a lifetime. He still may be that. We just have to see. It's difficult to say at this point, but I'm a perennial optimist, but I think what people might, I guess, the misunderstanding. I think the misunderstanding is more on with regard to what the Chinese think of Trump. I think that the Chinese actually have a lot of respect for him because of the way he deals with things, more so than other leaders we've had. I mean, and I've actually heard people say that who know influential people in China. So I think that's a misunderstanding. He invited Xi Jinping to his inauguration, right? And so I think that's a misunderstanding. I think also, and again, Xi's invitation to the inauguration and then the subsequent massive tariff is also an indication of how quickly he can go from one position to another. It's really fantastical, and it seems insane. It seems like he has no plan. I hope that he does. I think there is a plan, but that I think that certain things. I think that everything is negotiable. I think with Trump,
as a great AI generated image that went viral of Xi Jinping reading The Art of the Deal, right? Which is really, I've seen it around though in that sense. And then somebody flipped it with Donald Trump reading a version of that from Xi Jinping. So I do wonder sort of how the chess game plays out on this. Let's talk about managing risk for those that are wanting to invest in China.
Mm-hmm.
Right? What do you typically see in terms of how people think about either trading around positions, taking longer term allocations, managing those positions? Talk to me about that side of this.
Yeah, I think we had a very good example of that recently with the re-rating, which is what we call it, from the beginning of this year, where we saw a lot of moves in and out. A lot of hedge funds came into KWEB in size, and then we saw it move up, and some moved out, right, taking their gains. So we've seen a lot of that recently, and that's the advantage of and we obviously we'd prefer to see more longer term allocations, but that's what these products, our products, ETFs in general, right, are built to be liquid. And you can trade them all you want. And I think when it comes to when you're looking at investing in China, if you are looking at a long-term allocation, right, which again you can do both with our products, with other products, is you really want to diversify between offshore, what we call offshore and onshore. So onshore is stocks actually listed in Shanghai, Shenzhen, and then offshore is stocks listed in the United States, here in New York, as well as in Hong Kong. So Hong Kong is actually considered offshore, and it moves more closely with New York, with U.S. markets, and so we recommend about a 50-50 split between the two, which reflects the actual market capitalization. So one of the things you don't get with a lot of these popular China indexes, such as MSCI China, is they very heavily overweight the offshore. So MSCI in particular very heavily overweights offshore, and they have their reasons. There are certain complications when it comes to trading onshore stocks. Also, the calendars don't line up. There are different holidays in mainland China, different holidays in Hong Kong, and different holidays in the United States. So that can be challenging from a benchmarking perspective. So we have KBA, which is MSCI. So, which is ironically, it is an MSCI index, right? A50, which are the 50 largest, most liquid stocks that also have futures available. So that's another thing you don't get a lot of times mainland. And so we always, I'm always telling clients, right? You really want to think about these risks. You might think, oh, mainland China is more risky, right? But because there's a lower correlation between offshore and on, you're really reducing your risk when you have both, right? And you're really reflecting the full market cap opportunity. So we recommend using KBA to write that, to kind of right size that, what the bias you tend to get with a lot of China indexes towards offshore. So that's one. I think we've also, like I said, we do covered calls on KWEB. We do we have buffer strategies. So those are two examples of where quite literally you're investing in China, but you're reducing your risk exposure, right? And so we found those to be covered calls in particular to be quite popular with clients. And then also fixed income, I think is very underrated in China and in Asia. So we have another fund, KHYB, which is Asia High Yield. So inclusive of China, it's basically emerging Asia in the high yield bond space. And that's very interesting. It provides what we believe is a very attractive yield. And at the same time, a lot of these bonds have a lower duration. So, I don't know how deep we want to get into fixed income, but when you're looking at your exposure there, that's another place where you can diversify, where I think a lot of people don't think of diversifying with fixed income. And I mean, if you look at the China's 10-year treasury, you right now yields about 1.8 and change %. And it yields very low. And that's gone down from 3.5, 2-3 years ago. So you've seen like the opposite of what's the US, treasury. You've seen the China treasury doing the opposite. Right. And so, to have some exposure there, is also helps, diversify not only your China exposure, but also just your portfolio generally. Right. So yeah, I think those are a couple examples.
Well, I'll do one more question. And I know it's always a challenge as an issuer, right, in terms of answering questions like this, but maybe some just initial thoughts on this. Also from John, who asked some good questions earlier. If a trade deal is accomplished, what are KraneShares' projections for the performance of KWEB for the rest of 2025? Now, I will say this to somebody who's in the industry. No issuer is going to ever tell you that, right? You guys, and obviously when you're multiple funds, you're product agnostic, you're just providing the vehicle and performance. But if you were to guess not on the performance, but on sort of the longer term potential of KWEB, because KWEB is been a big fund, right, for a number of years, and it's sort of a go-to when it comes to playing the China side of things. What happens to, you think it's just going to be, a relief rally like in China's markets in general?
I think that China's markets more generally sold off somewhat in the initial tariffs. KWEB certainly did. So if you think of a trade deal and the cancellation or reduction of these tariffs to be the opposite, to having the opposite effect, then yeah, there'll be a significant re-rating. Now, that's it's really important though to remember that from the fundamental side, this doesn't really affect, like tariffs don't really impact KWEB very much from a fundamental side, right? The EPS growth, apart from PDD, maybe one or two other names, really is unaffected by tariffs. So this is a purely sentiment-driven phenomenon. Like for KO's price performance to be this impacted, and it was by the tariff announcement, purely driven by sentiment, right? So yeah, I mean, if you think that'll continue to be true, it's a sentiment-driven price, then by all means, yeah, like the announcement or a significant reprieve in tariffs will be beneficial to the KWEB's price in terms of sentiment. And longer term, we still see these companies as having great growth prospects. There's a lot going on, a lot of innovation going on in China around AI. And unlike in the US, where you have the main drivers of AI are companies like NVIDIA, and OpenAI and these more kind of very AI specific companies. In China, it's mostly driven by, you had DeepSeek and Manus and these guys, but it's really mostly driven by these internet companies are doing the most in AI, right? Apart from a few others. DeepSeek made its code open source, and these internet giants just took it and ran with it. And Alibaba's come out with Q1, which is said to be even more efficient. Even the Kuaishou, Baidu, they're all upgrading their models based on this. So anyway, that's a catalyst. In the internet, again, the KWEB internet space specifically, and just generally consumption rising, consumption rebounding too, which we're still waiting on to happen fully. I know we've seen this significant re-rating in these consumer names, but consumer confidence is still pretty low in China. That's driven by real estate, which has just now come back in tier 1 cities to 2020 levels. So we still have a ways to go with that, right? And that's going to benefit, these companies, which are the transmission engines of spending on everything now, right? And then third, and this is kind of a little bit going back to AI, is cloud computing. So you might think that, internet penetration has got already, I'm like that internet penetration story, because that's when, back when I started doing this, internet penetration was the biggest thing. It was like, oh my God, it's going to increase so much. That's why you want to invest in these companies. Internet penetration has increased. You might think that story's run its course, but what hasn't increased is cloud penetration. So businesses using cloud services and putting their data, their everything on the cloud penetration in China is actually very low. It's only like 50% of small, medium-sized businesses, which is crazy compared to here. So that's another kind of penetration story that we're going to see play out in the coming years. So those are, just in terms of fundamental catalysts. So those are all still very much there for KWEB.
Henry, for those who want to track more of KraneShares' contents, you had mentioned earlier, but I think it's worth reemphasizing, and who want to just in general learn more about the funds, where would you point them to?
Yeah, so I would point you to number one is KraneShares.com. There you can see our latest content, and I would invite you to subscribe to our research. So there's a little drop down there. You can sign up, and you can even pick which topics are interested to you, and we'll tailor that content specifically to your preferences. And then if you're really interested in China and you want to be informed of what's going on there, as well as get our take and differing perspective, get a fresh perspective on China news. Subscribe to our blog. That's ChinaLastNight.com.
Appreciate those that watch. Again, this will be an edited podcast under Lead Lag Live. This is a sponsored conversation by KraneShares, and hopefully I'll see you all on the next episode of Lead Lag Live. Thank you, Henry. Appreciate it.
Thanks, Michael.
Cheers.
My pleasure. Bye.